Good morning, good afternoon, good evening, everybody. Welcome to this episode of the Note Closer Show. As always, Scott Carson, excited to be here with you this morning. It is Friday here in the office. It is looks like it's been a gorgeous day here after a couple or a week plus of rain here. But today is Friday. Hopefully, you're having a great day. You got big plans for the weekend. One of the things I wanted to talk about today is how to identify and choose a market for you to pick notes to buy in. I had a great webinar last night with the Cincinnati Special Interest Notes Special Group, Interest Group, their SIG group anyway. Big shout out to Adam out there for putting that together and inviting me on remotely. And love sharing some information on due diligence with that group. And you can catch the replay on Facebook. We did live stream it as well. So we had quite a few people watch it. Over 200 views on it as of last night. But anyway, I wanted to talk about picking a market. Because a lot of people, especially if you're on the West Coast, you're like, I'm looking to invest something. It just doesn't make sense in California, Oregon, Washington State, Arizona, Nevada. A lot of times, those areas are overpriced for the most part. Now, that's not saying you can't find something that makes sense, but for the normal note investor, those markets are a little overpriced and just don't seem to make sense when you look at what you can buy with buying distressed debt. Like I was watching. Flipping through Facebook this morning, saw somebody's like, "Oh, this is what $9 million would get you." If I had $9 million, I would not buy one property. I'm sorry, you could buy a crap load of assets across the country and totally leverage your risk and go from there. So, what do you do when looking at markets to potentially buy in? How do you filter those out? Well, I think the best thing that you can do is talk to other investors. That's the first thing. Talk to other investors out there, see where they're buying at, because there's quite a few states that have a lot of inventory. Okay. So first and foremost, I'm just going to rattle off some states here that I think are great markets to be buying in. You have Ohio, you have Michigan, you have Indiana, you have parts of Illinois outside of Cook County, Missouri. I also am a big fan of, I think Kansas has got some opportunities there, even though it's about a year to foreclose. And then you also look at like South Carolina. It's about a year to foreclose, but it's really, really on the upswing. North Carolina is also a greater state to invest because it's a faster foreclosure state for the most part. And I like Florida. I think Florida's been hit a little bit hard. I think you need to hold off on buying in Florida for a while, just based on values, insurance costs, especially if you're going to be near the water with all the hurricanes that have been hit there recently. But those are the states that I would probably be choosing right off the bat. And I didn't say Texas. Texas is just overpriced, I think, right now too. Plus the fact that the fast foreclosure timeframes, the banks want a lot enough there. So let's talk about what you do if you don't live in one of those markets. And this is one of the biggest fears of investors, I should call this Fearful Friday, is that when they come from the fix and flip side of the business, from the landlord side of the business, they want to go out and touch it and feel it, see all that stuff. And you know what? If you're going to be looking at a bunch of assets in Ohio or Michigan and you pick one of the states, it does not hurt. Sure, jump on a Southwest Airlines flight, fly over to them, spend some time in some of those markets, drive around, spend a weekend. You can drive around and hit quite a few assets in a weekend. You start looking at buying in those markets. It's well worth doing it. It's worth the trip. It's worth the expense to really spend some time there. And so what do you need? Well, when you identify a state, the next step to do is then to look at the bigger markets. And that's really easy to Google. Top 5, top 10 markets inside of South Carolina, top 5 areas or top 10 cities inside of like Michigan, okay? Or Ohio, whatever it is. And those suddenly become if there's 5 spots in Ohio or 5 spots in Michigan, great. Those are your big cities to look at, right? So let's talk about that. If you're going to be looking at, let's just use Michigan, for example, obviously Detroit, okay? I would look at where there's big universities like Ann Arbor, where the University of Michigan is, Lansing, okay? Grand Rapids, okay? I would jump over where on the outsides of Michigan, like Flint, Bay City on the north side is a great area as well. There's just looking at those cities, those would be the biggest cities for you to be investing in. And there's a reason for why the bigger cities work better than the rural cities. It's kind of obvious, but more people are moving there. You have a bigger pool of labor. And what I mean by labor, I mean realtors, people that can help you fix the property if you need to do that, attorneys. That's one of the biggest things I think people outside of Detroit are running into, is that a lot of the work is going on in inside of Metro Detroit. The outskirts are having a hard time with construction and people and crews coming and finishing construction. So that's one thing you got to keep in mind. Avoid the rural areas at all costs. I mean, if it's a small city and you don't recognize it, just avoid it. Unless you're just getting it as a phenomenal deal, as a throw-in with your other assets. That's the big thing. Now the question is, okay, Scott, so I've picked my 5 cities, all right, in one state. What do I do next? Well, that's when you probably should jump on the horn and start looking for realtors. Now, how do I find a realtor? Pretty simple. You can go to realtor.com and look for realtors in that area. You can, when you Google an address there, oftentimes on Zillow will often, when you look on Zillow property report, they'll often pick 2 or 3 realtors on the side there. That's great. What I would also do is, if you find an asset or two in a specific city, let's say Flint, look for the nearest real estate office near you and then call the office and say, hey, I'm looking for an agent to help me out with this. Because that's, a lot of the senior agents, the agents have been around for a while. They've got their book of business. They don't want to work with investors. That's fine. No problem. Let them do what they want to do. But there's often a lot of younger, hungry agents that need a little bit of money. Hey, $50 to go do a BPO or a CMA and take photos is right in their wheelhouse. So calling a main office and talking to the gatekeeper at a Keller Williams or a Remax or an EXP or whatever the office is there nearby, your address is a great thing. And I've done this many times. I did this in Florida, driving by. Hey, here's a real estate office, literally like a block away from my house that I was looking at. Let's drive by, get a card for the main broker there, and then give them a phone call when they're back in office, or see if they can't meet with you immediately there. And just say, hey, I just picked up. I'm in the bank. Here's what I do. That's one of my favorite things to do. See if there's a real estate office nearby your asset and just pick up the phone, because that way they're nearby. That works very well, too, when you look to add insurance in the property. Many of your insurance companies don't want you to have a property manager within 100 miles of the asset. Now, you obviously want to have a property manager that's closer than 100 miles. And if it's a realtor just down the street, they can drive by, take photos for you, who's going to have a vested interest in your asset because they're going to get paid off it when you sell it. That's a really great thing to do, okay? So realtors is the first thing. Second thing, investors. And what I mean by investors? Well, what I mean by investors is this. You need to have investors there that can either buy the asset from you, or maybe looking to invest it, or maybe looking to fund the deal, right? Because everybody's a buyer, everybody's a seller, everybody's a funding source, okay? So the reason you also pick larger markets is you want to find real estate investing clubs in the area, okay? Now, what I mean by that, why is that? I mean, you've already got the assets. You don't need to find deals. Well, when you look to sell these assets, because let's just face it, when you're buying a note, if it's a non-performing note, it's likely at some point, probably got a 40 to 50% chance, if it's not, that it won't get reperforming, that you'll end up having to foreclose on it and then sell it off retail. The reason you want to be around or near real estate investment clubs in the cities that you're investing in or nearby is that's the pool. That's the source for you to sell this as an REO. This is the pool for you to sell it to a landlord to give you a high percent. This is a source for you to identify potential IRA investors to buy your reperforming note. That's a reperforming note, okay? So you're going to add investment clubs by going to meetup.com and just connecting with other meetup groups. That's what I do. I believe, I think last check, I had 100 plus meetup groups that I'm a member of. Now, one of the big things I would highly recommend is you adjust your email settings so you're not getting bombarded with emails come through from the meetup groups, or you have a specific email address that you use just for that meetup group. But one thing when selecting a meetup group is important is that it's got a discussion board, it's got active members, and then also it's a really nice caveat is that the fact that hopefully it has a they publicize their mailing list. Now, only about a half of the meetup groups now are doing that. Someone figured out that they can hide that. I think it's a great thing to have a mailing list where you can mail out to everybody in the group. I think it's extremely helpful for you to have that feature so that you can touch base with everybody or send an email out. I've used that. Message boards are a must. If you see a meetup group where they don't have a message board, they don't have a mailing list, it's really not worth joining. Because it's not a way to communicate. Now, I know a lot of meetup groups want to be able to focus better to do a website and have a sponsorship, a membership, and that's what they use that for. That's fine. Totally fine. If you're buying in an area on a regular basis, it probably does not hurt for you to join the meetup group, because one great thing, if you go out and take a look at your properties, you may want to align that when the meetup group is meeting, a real estate investment club is meeting, so you can kill a couple birds with one stone. Go look at assets and then swing by the meetup group. Now, the big thing is, I did this in Florida a couple weeks ago, and I had asked to leave the meetup group, which is kind of funny. It is okay. It is what it is. Their loss. But I didn't want a guru there. But anyway, funny thing is, you'll find a lot of great people at the meetup groups. You'll get recommendations for attorneys. You'll get recommendations for realtors there too. So that may be something to do on the front end when you're going out looking at assets. Identify when a meetup group is meeting as well, and go out there. And in an evening, you may be able to find everybody you need to know by talking with the president of the club, or showing up and say, hey, here, I'm new to the area. This is what I'm looking for. I need a realtor. I need a lender. I need a title company. Those are the great things out there as well. Now, also reaching out to a local title company in the area. You may be able to find a realtor, hard money lenders, and things like that as well too for you. One thing that I think is important too, that's a valuable asset, is having a hard money lender locally if you're looking to sell the REO off and need some work. One of the great things that I like doing is, if I take an REO back and we're looking to try and sell it, and it needs some work, is I'll reach out to local hard money lenders and have them underwrite the deal. Now, you're like, what do you mean have them underwrite the deal? I'll literally say, hey, what would what kind of loan will you do? And then let's pull some numbers on this asset. What's the ARV? What's the market value look like? How much work does it need? Those kind of things. And then I'll get a hard money lender to say, okay, here's the numbers. Here's what we would approve on the deal. And then that's really a valuable tool to use when you're marketing that asset later on. Hey, this is pre-approved for a hard money loan with Longhorn Investments or Noble Capital or Streamline Funding, whatever. It's a very valuable thing that can help you with you moving an asset faster, moving it to somebody who doesn't have to worry about going on getting financing that's already in place. It's a very, very, really great thing to have out there as well. Okay. One of the great things that I also am a big fan of doing when I'm picking out markets is see what's going on. Try to stay above the 10,000, population 10,000 or greater. You want to see what's going on, days on market, once you get a CMA from a property manager or a realtor on an asset that you have, because you want to make sure the days on market really aren't over 6 months. You don't want to be over 180 days. That's a slowing market. It's also a market that you're going to probably have to price the asset below value to get a 30-day quick sale price. And so that's one thing you got to keep in mind too when you're talking to agents. When you find an agent in an area, ask them to pull comps on an asset, traditional, and then also have them give you a 30-day quick sale price. If there's a big discrepancy in what the value there is and then a 30-day quick sale price, that's going to be days on market holding. You have to hold that asset if you want to get full value. That may deter you from buying the asset no matter what it looks like. Okay. Now, hopefully, when you're buying non-performing notes, if it's occupied, you can then get the property reperforming, and that solves all issues. Okay. Solves all issues out there. Now, one thing that you may want to do as well is take it one step further. Okay. One step further and jump on the county appraisal districts and search for IRA investors in the area that you could market to. Now, why is that important? Well, what I like to do is IRA investors are very valuable. They're great to have. They've pulled the trigger, especially locally. And if you can send a letter out to them, hey, we just bought this asset in your area. It's a non-performing note or performing note. Hey, are you looking for deals? We'd love to talk with you. Okay. That is something that's very valuable. It doesn't take much to do. Okay. Heck, you could go on Vista Print and order like 50 custom postcards for that one asset or 100 for that asset in an area, and then just market it out. Just drop a quick postcard or drop a quick letter out. You could do an easy mail merge once you've pulled the list of IRA investors off the county appraisal or the county clerk's website for people who've lent from their IRA, and then just do a mail merge. Send it out, boom, drop it out. Hey, we just bought this asset in your area. Have a nice photo of the property. Here's the details. Let us know if you're interested. we've got more deals like this, or if you're interested in buying this asset from us, let us know. Not difficult to do, but that's, I think a lot of people, when they start looking at assets, especially like to start selling them, they start going that route. Whereas, especially if it's like a condo, or if I'm looking around an area, are there other investors in the area? Taking the addresses of the IRA investors and actually mapping them in batch geo to see how close they are. That's a pretty cool thing to do. That's a very valuable thing to do with your time. It also helps you out with your marketing. So, there's a lot of investors around the area that I can map, or, they may be right next to me here. They may be down the street from the asset. I see some people like that. But that's an easy thing to do with your batch geo. Besides just pulling this, there are other companies that you can pull IRA owners on. I'm not going to give that away. Those are a little bit harder for a sale on an asset, because then you've got to educate those people out there, and that's not what you want to be doing in the education side, especially if you're moving deals on a regular basis. So let's do a quick little recap here for you. Pick in your 5 cities, right? 10,000 or greater population. Okay. Finding realtors. Okay. Finding meetup groups. Okay. Or real estate investment clubs. Okay. Going and networking with the real estate investment clubs to find your realtors, your hard money lenders, your title companies, and then also jumping in the appraisal districts to find your IRA or self-directed IRA investors who have pulled the trigger, on an investment, and then marketing to them. That's some of the easiest things to do. This is why I tell people oftentimes you don't need to be buying in 5 or more states when you start off with. Just start off with 1 or 2. Now, what's going to happen if you start doing this on a regular basis? You're going to eventually have more investors than you'll have capital, which is great. It's a great problem to have. And which that means then you're going to start reaching out to other markets. Oftentimes, investors just want to put they want to get their money working. They want to make a good return on investment. That's great. Just offer them up some of the assets you're working through, and you'll be able to start adding deal flow, because you can go to another state. You can do the same thing in another state, but you may not need to work so hard on the front end, because you've already built a great pipeline of private capital, IRA investors, and then you're also reaching out to your local database of banks or hedge funds. Say, hey, I want to buy in Ohio, or I want to buy in Michigan. These are the 2 states I want to buy in. Do you have anything on your portfolio? That's about as narrowed down as I would go if you start going to states. When you're reaching out to banks and asset managers, hey, I'm looking for anything in this state. I'm looking at anything in this state. I would not go cities. I would not go zip codes for sure. That's a big mistake I see from several note investors. Somebody reached out to me the other day and said, I want to buy just in this zip code. I'm like, well, good luck. Well, can't you send me anything? I'm like, I'm not going to add your name to my list, man, because I'm not going to take the time to sort it down for specific zip codes like that. That just does not make sense. It's too minute. It's not worth my time. It's not a good thing to do. All right. Questions, comments, concerns from anybody out there? Now, another thing that I would also highly recommend that you do, I did this earlier on. I don't do this much more now, but I did this a lot earlier on when I was a new investor, is I would literally get a map of the state, the map of the state that I was investing in, and I have that on a cork board, and then I would add my assets around. I did that for Florida for quite a bit when I was living down in Florida. I had a cork board map of it, push pins of where my assets were located. And that helped me too when I was looking at other assets. And so that's one thing I still do this day when I'm mapping stuff. Just so I get like a list of Ohio assets in. Great, I'll map them. But what I'll do is I'll add my addresses I already own in Ohio. Excuse me. And I'll reclassify them as, on my map, I'll say A for the ones I'm buying, or B, the ones I already own. And then when I run through batch geo, I'll validate it by A or B, and it gives me a map. Like it'll show the red dots are the ones I'm buying, and the blue ones are the one that I own already. So it helps me identify opportunities where I already have a realtor for that asset. Hey, Jane, I've got another asset I'm buying that's near 123 Main Street. Would you take a look at it? Or here's a couple more to add to it. And realtors love that. That's a really great thing. When you're feeding them multiple assets or business on a regular basis, they really love that. It's a great way for them to do less work, because they can use the same vendors. They can make a few phone calls and do the same thing. They don't have to drive as far. But that's a really cool thing to do. If you're owning assets in a lot of the same markets, and you're mapping stuff, don't be afraid just to pull your addresses over into that batch geo map that you own already. You just need the addresses. You can leave all the rest of the information for the asset, all the information you're mapping for the assets you're looking at buying, but add in the assets that you own already. It makes a very, very valuable spreadsheet that you can take a look at. Ooh, then you get a bigger picture of what your portfolio could look like with the added inventory on there. All right. Now, one of the best things too, as well, you may want to do as well. You may want to take the time. To reach out to the local real estate club too. Once you've bought in a few, and reach out to the president and see if you could get, hey, if they're looking for a speaker in the next year. Hey, I bought assets in this neck of the woods. Love to talk about the note business. I'm buying in your market. I got some case studies. I've got some deals I bought in your backyard. I'd love to come out, maybe share what we're doing. That's an opportunity for a lot of people, and you'll see that happen in RIAs from time to time. I know we've had some of our notes students, our coaching students, who have given presentations at different RIAs that they're a part of. I know Karen Peterson has done this. I know Robbie Woods has done this in the past, and a few others have done it to the RIA groups about some of the deals that they've closed in their backyard. And it's been very beneficial for them, getting people to invest with them, people to know who they are there locally, and working to network and make some things happen, raising capital, all that good stuff. But they also become in your database for a variety of things. Like I said before, everybody's a buyer, a seller, and a funding source. So that's the big thing to keep in mind when you're looking at that aspect of things out there to helping you take your business to another level. All right. Another thing that you may want to do as well, as you have a couple case studies or deals you close in an area, you may see if there's a local radio show. Sometimes there's in markets with big enough populations, they have their own radio shows, and there's people on the weekends that have little radio shows that you reach out to. Hey, I bought some assets in Woods. I got some case studies. Are you looking for guests? Because I guarantee a lot of the radio guys or even podcasters are looking for guests on stuff that makes sense. Like I get bombarded weekly with people that want to be on the podcast here, but they're not niche, focused on notes. They may be on, other things. Like I had somebody that was on like, oh, I'm a fix and flipper. I'm like, well, we're not really a fix and flip show. Or this guy, I've done a lot of wholesale deals. Well, not really a wholesale show. So keep that in mind. But that's something that we've used in the past. Hey, I've got some assets. I'm going to use some case studies in your market. Would you like to have me on as a guest? Or I would like to be, I may be a valuable guest to your show. Talk about some of the case studies out there that are available. So that's something that you might want to look at doing. Could be very valuable, getting the word out and talking to people. Now, one thing you also do, I'm a big proponent of also going on to like LinkedIn. You may want to go on to Facebook groups as well. See if there's a custom Facebook group for that audience, like the Ann Arbor Real Estate Investing Association, or like Houston has a 713 Houston Area Investors group on Facebook. Pretty big group that you could post to. I think when you start getting those groups that are so big like that, though, people stop looking at it because they just become a post fest. Nobody really takes the time to go through and look at a lot of those postings. I've actually been removing myself from some of those groups because there's nothing really active going on. There's not really any networking going on like our WCN crew page is seeing, and we're pretty excited about that. So when you're picking a market, those are some of the great things that you can do to help you really leverage that market, to really help you make some things happen, to help you find the people you need, raise the capital you want, and close more deals. And so, are there any other questions or comments from anybody out there that's watching on Facebook Live this morning? I can see Jeff Wolf, Stephanie Goodman. Good to see you. If you're listening on iTunes or Stitcher, or any of the podcasting platforms, or watching this live, even on the Binge networks, thank you so much. We really appreciate you taking time in your busy day to listen to us or watch us here on the Note Closer Show. Best thing I can recommend for any of you guys out there and gals out there looking to do markets, look at who you would be using in your market, the vendors, what you would do in your backyard, and apply that to the same thing in other markets. It's a lot easier. It's a lot easier than most people make it out to. I was talking with somebody in Rochester the other day when I was up there talking. He's like, oh, I just can't invest. It's like, yeah, you can. You just choose not to. And he looked at me all funky. I was like, listen, it's not that difficult. You do the same thing if I was investing in Rochester, Minnesota, as I would if I was investing in Rochester, New York. It's the same people, the same things you do there. There's investors there. They're just like you. So reach out to them. Find somebody. Dude, that's what's so great about our mastermind group is there's people that invest all across the country, and it's such a great network of people to reach out to. Hey, does anybody have somebody here? Does anybody have anybody here that does this? Okay. Very, very valuable network. And that's the thing when it comes down to investing in other markets. Use the network, build a network, or tap into one. It's often easier to tap into one than having to create a brand new network out there. And if you reach out to other people that are invested in those markets, they'll often have the attorneys, they'll often have the realtors, they'll often have the title companies, the people that you need to make your activities work. They probably aren't going to give you their private money investors, but that's something that you can do very easily as well. So hopefully you have a great day, everybody. Go out and make something happen, and we'll see you all at the top, everybody. Bye.